Morning, guys. Most important thing is the oversold sectors are the ones that are moving nicely, and partly on some innocuous comments from the Chinese Commerce Ministry. Look at the S&P futures here. 7 o'clock, 7:15 Eastern Time, Commerce Ministry. Trade disputes should be resolved with talks. Does that sound very enlightening to you? It doesn't, but it was good for 10, 12 points on the S&P, and you can see we're still essentially up right now on the day. The important thing, I think, here is all the usual trade suspects move to the upside. So you look at your semiconductors, your Xilinxes, your Microns, everything else sort of jumped on that. And that's the obvious one. There you go. You see all nice moves up 2 or 3% in all those stocks here. Elsewhere sectors, you'll notice the stocks, the sectors that have been most oversold are bouncing. Transports have been terrible this month. Semis, retail, awful this month. These are the most oversold sectors. They're bouncing the most. Curiously, China stocks not bouncing at all. That's kind of interesting. I'll look a little bit more into that. So where are we right now? As I mentioned, market conditions dramatically oversold in several transports, semis, retail, good parts of the NASDAQ, very, very oversold. They're the ones that are bouncing. This makes sense today. Trading does. Very negative sentiment on the street right now. We've got expectations of rate cuts. We talked about several people, several strategists thinking 3 rate cuts potentially in 2019 right now. You can see the concerns about slower growth in the markets. Just look at the transports. Look at the big logistics and transport companies this month. FedEx, J.B. Hunt, UPS, Landstar, C.H. Robinson. Well, this is terrible. This is quarterly numbers, but this is the concerns about slower global growth reflected in the U.S. stock market that we're seeing. Another one you want to see is Tiffany. Now, of course, Tiffany came out, and Tiffany's trading down. It's up right now. They generally gave a slightly lower global outlook for the full year. They did talk about what was going on in the Americas because the comparable store sales were down 4% in the United States. And there's the China trade. They specifically cited Chinese tourists buying less products and coming less to the United States and buying it. So there's America's down 4%. Asia Pacific was flat. Japan was flat. Europe was down about 1%. But you saw what was the comments out of China saying tourists from China should be careful coming to the United States. They talked about higher crime. You haven't heard of that in a while. But there you see this whole effort, the back and forth, starting to impact U.S. stock market here and clearly, definitely impacting Tiffany. By the way, one thing very interesting about Tiffany, they raised the dividend. You see these companies are really trying to get people interested. Tiffany now has a 2.6% dividend yield. These retailers have been trying to talk to people about being a dividend play. That's a kind of a bit of a stretch. But if you take a look at some of the dividends on some of these big companies, Macy's, Kohl's, L Brands, and Gap, 5, 6, 7%. We'll see if that sticks along with that. But remember, a lot of this is because of the price declines that we've been seeing. Just off the highs for the day, Carl, back to you.